Hi guys, once again this is Alfred from Amassers.com, and I'm back with a quick update after the CPI and after the FOMC meeting. We're going to talk about what they talked about. We're going to look at some charts for Bitcoin and Ethereum, talk about how things are playing out this week relative to what I shared in the last video. Let's see what happened and let's just dive right in. As always, I'm starting right here on my site at amassers.com. This is a free indicator. It's a market sentiment indicator, and I go into great detail about how to use this indicator in this little video right here. It's just 9 minutes. I'll talk about everything here. Right now we got one plus bull on Bitcoin, and ETH is at neutral. So the higher the number, the more fear there is in the market. Lower numbers mean less fear in the market. And let's dive into some charts and talk about what happened today, which is the 12th of June 2024. Okay guys, this is a Bitcoin 4-hour chart. This is the same chart I used earlier this week. And I've got this gray area here. Got this little gray area. I usually do these areas at the top of the week. This area right here that delineates when the week started. Now usually I'm waiting for breaks. These guys have been really tricky. They've been trying to do some fakes recently. But another way you can use this, I usually tweet these on Twitter at Trader Alfred, is to understand that we may break out of this area. This is where you want to be short because they're breaking out down. But we are often going to want to get back to that area. The reason is that market makers, they don't want to get overextended on either side. You can't afford that because at the end of the month, at the end of the day, you're going to have to pay. Okay? So no one wants to lose money, including the market makers. So they think it's hip to be square. They're going to get back into this box. They're going to make sure there are not too many longs, too many shorts. They're going to make sure the right amount of people get liquidated so that they can make their money. Okay? That's why I don't often hold positions too long, and I try and get into positions on the edges. Okay? I talked about this area here, which is the average swing down we're expecting for the month, and we almost got there. We were somewhere hovering around here on my last video. We had a few more hours of pump dump to the downside. Almost made it into this average swing down, but this is for the month. This is for the month, and now this is the 12th, and we bounced back. Now let's talk about the CPI. CPI came out in the morning. Some folks feel it was better than expected, and let's clear this off. Some folks feel like it's better than expected. CPI comes out, market bounces. We jump to the other side of that gray area. Got as high about 69.6, 69.7. Okay, now that was 4 hours. This is a 4-hour chart. Okay, a little while later, here comes Jerome Powell, and everything these guys were expecting here. CPI is better. Maybe these guys are going to start lowering the rates so that we can get some of this cheaply, easily printed money going again and dump it into our speculations. Now, here's what really happened that got guys really bummed out is Jerome Powell comes out, and there's a thing where they talk about their plans of how many times they're going to lower interest rates this year. Everybody previously expected 3 instances of lowering interest rates. This was revised at this meeting down to 1. Now they're promising maybe 4 instances on next year, which would be 2025. Now, once the market got a whiff of that, even Bitcoin, like I said in the other video, no man is an island, nor coin. This is what happened. They just dumped back down because the news is we gotta wait till next year. And hey, that's the news right now because anything can happen if they don't believe and have enough confidence in their ability to lower inflation. They'll revise that, and we won't see 4 reductions on next year. I'm just giving you guys the straight dope, okay? I've been doing this for like 20 years. It's really tough to just worry very much about macroeconomics. This isn't just my perspective. Warren Buffett, arguably one of the greatest investors of the last century, he doesn't worry a lot with macroeconomics. I am a person that trades on statistical arbitrage. All of this to me, when we move back up, all of this to me is numbers, okay? Because right now, a lot of what we're talking about, this is going to happen, that's going to happen, here's a coin for this, here's a coin for that, it's speculative. That's why we move back up, okay? Here's we were already diving, and I like to see us dive out with strong volume. I don't have a volume indicator on here now, but there's really only 2 things the market can do. The market can go down, the market can go up. 3 if you want to say the market can remain the same. So the market makers have to get rid of all of the longs, and this is where they get rid of all of the shorts. But the great thing is they're going to show you how far they're willing to let this thing go. That's what the institutional guys are going to do. So if you understand that this is statistically where we should be on the month and we're just at the 12th, they can't let it go too far this way. Okay, back over here, I've got a 4-hour Ethereum chart. You guys remember the other day I was like, well, we're getting here into the zone. This is the same monthly statistics. This is where we should be, somewhere in support, a support zone for the month, but we're only on the 12th. Okay, now we dipped down into here, and then we started that move, that rebound. I mentioned in the last video I would prefer to have gotten in the ETH because 2 reasons. We saw more fear on our fearmonger indicator, and that's also reflected statistically here on the charts. Okay, and we bounce back up again. This, look at this, 1 2 3. This is the same as the other chart. Bounce back up. Everybody's expecting some nice cheap money to be printed. Jerome comes out and says, no, not today, not gonna happen. We're gonna hold it off maybe the next year. And we get back down into this area, this support for the month. Everyone knew the CPI was coming, all of that back and forth. In the last video, I talked about it. There has to be an instance where there's a lot of liquidity, right? And a lot of action going on, and that's going to happen during these major reports. So when you sometimes, if depending on what you're planning on doing, that's when you want to take your positions. With the market makers, you wait, you see what they're doing, you see what the institutions that are controlling all of this, we're trying to figure out what are they doing. How would I go about robbing people if I had the most money? And that's essentially, it sounds cruel, but to me, that just seems to be all it. That's a lot of trading right now. Okay, that's just a grumpy old man perspective. And once you can figure out that, then you do your actions on it. This is an area I talked about buying. Okay, maybe you went long there. Okay, they can't go too far. Hey, maybe you went short here. Maybe you went short because this for today, for yesterday, this was 1.5 deviations. I got my deviations plotted here. Um, they're not going to let it go too far. There are ETFs now for ETH, and there are ETFs for Bitcoin. So once these guys hit the market, they're going to start squeezing volatility. They're going to get it to a place where it's comfortable for them to make these markets. That's all I got, guys. See you guys on the next video. Once again, if we've helped you, please help us by sharing this content with others. It just takes a little second or two to click that like button, and it helps a lot with the algo and other guys finding these videos. See you guys on the next video. Once again, thanks a lot for taking out of your day to listen to me talk about crypto and these charts and what's going on economically. See you guys on the next video. Once again, this is Alfred for Amassers.com.